Good afternoon, everyone, and welcome to RegTech Matters, Overcoming Startup Challenges and Hurdles. My name is Deborah Young and I'm the CEO of the RegTech Association. I'd like to start in the spirit of reconciliation to acknowledge the traditional custodians of country throughout Australia and their connections to the land, sea and community, and we pay our respects to elders past and present and extend a warm welcome to all Aboriginal and Torres Strait Islander friends here with us today. In acknowledging country, we honour the resilience, wisdom and the innovative spirit of Indigenous communities. So to kick us off, RegTech is one of the fastest growing sectors in compliance and regulation, and there's increasing demand for solutions that look to streamline things like processes, reduce risk and improve efficiency. The opportunity for RegTech startups is enormous, but like any new venture, the path to success does come with some challenges. From securing funding to navigating complex procurement processes, convincing decision makers and overcoming resource constraints, founders must be resilient and they must be adaptable. Today, we're going to hear from 4 founders who have faced these hurdles head on. They'll share their experiences, insights and strategies for overcoming challenges and driving success in an evolving industry. But before we get underway, there's just a little bit that I'd like to share with you, as well as some housekeeping. We have some other events coming up, which I won't name them all one by one, but there are some fantastic showcase events, and the first 2 are showcases. So if you're looking for solutions that solve for fraud and scams, or you have an interest there, or regulatory compliance, you can see the first 2 programs. Then, of course, we go into our major APAC conference to be held in Sydney on the 8th of April. And as part of that, we've opened up applications for the APAC region RegTech Awards, which will be given on that day, on the 8th of April. And we have also introduced a new RegTech Startup of the Year. So if you're a startup and you're online, I should consider applying for that. Thank you. Just a little bit of housekeeping. Today will be recorded, and every delegate that's registered will receive the link to the recording. If you could keep your cameras and mics off unless you are presenting, thank you very much. And we ask that if you have any questions, that those questions be placed in the chat, please. Don't be shy. Pop your questions in there, and we're going to actively ask our moderator and the presenters to jump directly onto the chat to answer them. There will be at least one poll, and we would appreciate your input to that poll, as that helps us with the quality of these programs going forward. It's now my great pleasure to introduce you to our sponsor today, and indeed our moderator for the event. Peter Deans is a former Chief Risk Officer and retired from that executive life in 2019 after a finance career spanning over 32 years. Peter is today an industry-leading risk management and strategy advisor through his firm Notwithoutrisk. He's also a non-executive director of NerdWallet Australia, the equities trading platform Trade for Good, and indeed our very own the RegTech Association. He's also an advisory board member for several fintechs and startup companies. Recently, Peter authored and released a book on startups titled The Startup Toolkit, a step-by-step guide for founders. I've had the pleasure of working with Peter over the last 7 or so years. His wealth of knowledge and insight is enormous, and his passion for the future of great RegTech puts us in some pretty good hands today. So welcome to you, Peter, and I'm going to hand over to you now. Thank you very much.
Thank you, Deborah. A warm introduction as always, and welcome to everyone that's here virtually at the event, and of course those that will be looking at this on demand later on down the track. We've got 3 fantastic founders, and I know 2 of the 3 very well, and the third one I've got to know over the last couple of weeks. And I think probably just not so much just the preface to the book, but just the observations. As Deb said, I had 30 odd years or so working for a number of domestic and international banks. And during that time, you sort of come across effectively founders when you're dealing with private businesses, self-made business people, millionaires, billionaires, and they all have their own unique story about the journey they've been through. I've yet to meet anyone who said it was easy and everything went to plan. And I think in this sort of age that we live in now, where it is relatively much easier to start up a business than 10 or 20 years ago. And I think the growth, not just in the RegTech sector, but fintech and agri-tech, prop tech, there's a lot of tech businesses both here and overseas. It has created enormous opportunities, and perhaps the plethora of startups does mean that you've got more and more stories to be told. The successful ones and the not so successful ones. The book that I released just before Christmas, and we'll provide some details at the back of it, is really a guide of what I've pulled together. I think it's 126 individual tasks and activities to give your startup the best chance to getting off the ground and being successful. But every task of that 126 is not easy. And I think when talking to Deborah and Nathan, the panelists, it was a matter of just trying to give some insights into how founders overcome some of these challenges, and every startup has different challenges, different type of business. Some have very few staff, some have lots of staff, some have very few business partners, some have lots of business partners. And I thought it'd be really good to have this session early in the year, and talk about some of the success stories and how these founders overcame success. I probably just think, not want to preempt the discussion, but startups are not for the faint-hearted. It is a challenge, but at the same time, incredibly rewarding. And the startups that I've been involved in, it's great to see success, even the little bits of success along the way. So with that, I might just ask each of the panelists to turn their cameras on and introduce themselves. So I can see Chris is there. So Fiona and Al, excellent. I've got the three of you. Maybe if you just briefly introduce yourselves, just briefly introduce your business, and then we might get into some of the panel questions. We've got sort of about 40 minutes, so plenty of time to talk about the topic. And then, as Deb mentioned, if anyone on the online now has got questions, please put the questions in the chat, and everyone will be able to see the questions as well. So make the panelists earn their money for the 40-45 minutes. Not that they're being paid, of course. Fiona, might start with you in that glamorous beach house. You've obviously been successful being able to have such a great beach house.
I have a great designer. Yeah, so hi everyone, I'm Fiona Long. I'm the CEO and founder of Assuredly. Our business helps security and risk teams to assess the maturity of their security controls in a way which enables them to not only manage their risk, but meet the hundreds and sometimes thousands of obligations when it comes to security standards and frameworks without the need for complex systems.
Excellent, thank you. Chris Tilling, you're going anti-clockwise in my screen.
Oh, good. Chris Tilling, founder of a company called Agika. We're data specialists in financial services. So we sit between all of the technology providers and the banks. We support the banks in getting their data compliant and ready for integration. And then we work with various technology partners to do the work that allows all of the capabilities within the technology to be released in anger.
Thanks, Chris.
Yeah.
Looking forward to hearing a bit more about Agika. And Al, our man down in Melbourne.
Thanks, Pete, and thank you for having me. My name's Al. I'm the co-founder of Trade for Good. We're the first ever trading platform that is built from the ground up to have a social impact. And we do that by sharing 50% of our fees or our brokerage to a charity that the end investor chooses. Then, depending on their tax situation, that they can claim that as a tax rebate. As I like to call us, we're like an investment bank, but with morals.
Excellent. Thanks, Al. And I think, in case you did miss it, I'm actually on the board of Trade for Good as a non-exec director and foundation investor as well. And it's been great working with Al since the end of 2020, I think, wasn't it, or early 2021? Come to your story in a second. As I mentioned, we've got a bit of time, so Fiona, I might get you to sort of kick us off. Just tell us a little bit about your journey with Assuredly, and some of the key startup challenges and hurdles you had during the way.
Okay. Well, yes, I had a background in corporate for about 17 years before I started my own business, and I started a consulting business to start with. But I've always been a builder. I've always built things. I built little apps along the way. They all failed tragically, but I thought they were great ideas at the time, little side hustles. So I've been a builder for a long time, but did spend a lot of time in corporate. And for the last few years of the consulting business I was running, I still run that on the side now, but just select clients. For the last few years, I realized that many businesses had the same problem, which is how to deal with security questionnaires and how to understand the maturity of security in their business. And security questionnaires were really painful, and they still are now for anyone listening and who's a security and risk officer. You would have seen one along the way, I'm sure. So I'm in my 40s, single mum with a toddler, and I decided to solve the problem by building software. I've never been a founder before, just always built things, but never been a founder. And so I started mapping out what I wanted to build and started building. And I hit the street, I met with clients to get feedback, and I got some to sign a piece of paper saying they'd be interested in looking at it if I built it. And then after a few years of thinking about it and 3 months of 18 hours a day building, I had my first piece of software. And so during the build, my first big challenge was realizing that I can't develop it all myself. So I got an amazing developer who's still with me today, thankfully. And but I didn't get the first proper sale for another 10 months. And so during this time, apart from selling and pitching and doing demos, I built the governance structure of my company, what skills I needed, financial forecast, competitor analysis, marketing models, deck after deck, website content, and the list goes on, of which it turns out I needed very little of in the early days. So I continued getting a few clients, and after about a year in the market, I got invited to join an accelerator, and that's when I first met other founders and investors and startup folk. And that's when I found out some key things. So firstly, a lot of founders like to have an anchor client, and so what that is one that'll effectively pay for the build. Or without that, they get an investor to give them lots of money for the build. But I didn't have either of these things. Also, every founder I've met so far has been a co-founder, so they had more than one person effectively working for free on the idea with as much passion as them. But fortunately for me, I have a bucket of tenacity and a very strong internal locus of control. So when times get tough, as they always do in a startup, when cash is strapped or you can't see the light at the end of the build tunnel, I lean on these two concepts. And one is my emotional runway and my financial runway. And I like to use this in life as well. When things get really tough in life, these two things help me think about, say, for example, from an emotional point of view, do I still have the motivation, happiness, drive, and other emotional resources to lean on? And two, how much money do I actually have in the bank? How many dollars? I've had a few friends of mine been made redundant over the course of my many years working, and I always say to them, okay, what's your financial runway? And they're really worried. And I say, look, work it out, work exactly out how many months you have before you're on the streets. And most people work out they've got 6 months or 12 months or maybe 2 years, and it does help you feel better. So when you put these things on a graph, I can always see things if today's a bad day and things keep going that way like they are today, then yes, in a couple of years' time, I might be at the end of my runway, but not today. Today is not the day to give up.
Be interesting to hear how you quantify the emotional runway, but maybe we'll come back to the emotional side, because I know just in our little prep call we did want to talk about managing stress, which we might stay for a bit later. Can I just ask you one question just off the very early on? You said that you had a consulting business and this was the side hustle, and you continued to do the consulting. That's obviously from a financial perspective quite important, because I think a lot of startups, founders throw themselves all in and there is no revenue full stop, not just for the business, but for them as founders. But by the sounds of it, that was quite important for you to keep that consulting revenue going, or having the other earning stream.
Yeah. Well, I need to put food on the table. Look, I had enough money. I threw a lot of money at building the software, and I knew I had enough money. I could stop doing consulting, for a couple of years, and I'd saved up through my consulting practice to do it. So I could stop, but it turned out I had some great clients. They had these problems. So actually building and keeping my foot in the game and keeping in the industry face-to-face with clients is really important. Now, when it comes to it, when I talked to a few investors, when I got into this accelerator, and I was faced with really challenging meetings with VCs and all sorts of people who were just interested in learning about what I was doing and challenging me, because I was in the accelerator, and that's part of what you do in an accelerator. You get challenged by this mob. There was quite a bit of criticism about that what are you, a consulting business, or are you a software business? What are you? And I was really, I might have even had a tear one night saying, hang on, I'm a software business. I behave like a software business. Well, it turns out that I am a software business, and it turns out that I can make up my own mind about what sort of consulting and how I still keep my foot in the market around consulting, and it's okay. I do think that my field of expertise in cybersecurity consulting is a specialist field. And so being able to continue to do boutique assignments, which I do, and I get to select my clients now, is great. And I enjoy that work. I still enjoy going face-to-face with clients and really helping them solve a problem. But I always do it with my software as well. So, that's a bonus. So my software doesn't just help end clients and their businesses, but if you employ me, I'm going to be using my software to do my job, because our software makes it easier. So it makes no sense.
And a lot of the software companies, established ones, they do actually have consulting businesses. So yeah, I think it sounds like you might have encountered some harsh critics there. Again, wouldn't mind maybe come back to the value of accelerators later on when we finish off the discussion, but that's fantastic. Al, we might kick off, go on to you now, just about your journey with Trade for Good and some of the challenges and hurdles along the way.
Yeah, sure. Thanks, Pete. Well, brief background about me. I've been in broking for 37 years, and I guess what we do with the sharing of brokerage is not a new model to the stockbroking industry. It is certainly in the self-directed space, which is where we play. So we don't provide financial advice. We just give you the tools to execute trades. If I'm an advisor at Macquarie or at Morgan Stanley or whatever, the house is always going to take 50%, 60%, sometimes 70% of what you write. So the model was there. We've just decided to give it to someone who's maybe a little bit more needy than an investment bank. So we started, as you said, 2020. I think we executed our first trade in January. We started the business, and I thought we'd did the basics very well, Pete, as you well know. I think we raised some capital. We've got a very experienced board behind us. Structurally, we pulled it all together. The agreements and the partners in trading, and we luckily didn't have to build any software. We partnered with a trading platform, did some branding, that sort of work. We thought, and most importantly, we had a great idea. I think sometimes your great ideas don't clearly resonate with everyone, and I think we've been probably a little bit guilty of that. I think our biggest hurdle and challenges has been client acquisition. When we started out, we thought we had this great marketing plan, and that was the charities will love what we do. They'll get right behind us. They'll happily, help promote the business, promote what we're doing, because at the end of the day, that's helping them. I think that was a real setback, was the fact that the charities really weren't that interested in trying to help raise awareness of us and how we're going to help them. So we struggled along for quite a few months, 6 months, 8 months of sort of just figuring out how we're going to therefore pivot the business on our marketing plan, which led us to then have to go back, raise some more money, and come up with a proper B2C business plan or marketing plan. So we did that. We did the TV commercial. We raised a whole lot of money. We spent a whole lot of money. And I think timing for us was a critical hurdle as well. It was during COVID. At the time in our market, there was a number of players who came to the industry at these deep discount broking rates. So instead of charging $20 a trade, they were coming in at $5 a trade and $3 a trade, and had massive marketing budgets. So they were everywhere. They were on trains, planes, and automobiles. They were on trams. They were on TV. They were everywhere. So, you know, I think 3 months and about $500,000 later, we ended up with probably 100 accounts and probably 2 did a trade. So it was a big hurdle and a big, you know, slap in the face, to be honest. I think what we did learn from that was, well, we're not going to continually throw out a large sum of money at the B2C space. That you know, that's not going to work. You know, we're going to have to pivot the business, and luckily, you know, we can trade with anyone. You know, we're, as simple as it sounds, we can trade with anyone, whether that's you as a retail investor, or whether it's a fund manager, whether it's Coda Capital, one of our good wealth management clients. You know, anyone who trades a share, we can do it. So that's what we did, and that was, you know, probably 18 months into the journey, and that's where now we've slowly been building that side of the business, which has taken its time, but it's certainly been a beneficial way of doing it, and certainly, you know, they were our biggest hurdles. You know, it's that cost of client acquisition.
Yeah, and I think I know, you know, you can read a lot about the fintechs, that customer acquisition and the revenue is probably number one issue. You know, whether you've operational issues, partner issues, or team issues, ultimately it still comes down to revenue. And I think it's interesting, again, having been with Al on the journey, that, you know, as he touched on, start of COVID, which wasn't necessarily a problem, and arguably a lot of people sitting at home, getting in all the government benefits and a lot of spare time on their hands. You know, in theory, you know, the opportunity there was trade, but as we got into a year or two, as Al said, there was a lot more competition. And then I think ultimately the competition became a little bit, you know, outside the broking space. It wasn't just CommSec, the new entrants, but it was the Robin Hoods in the US. And then, of course, cryptocurrencies exploded. So the competition was really where the individuals are putting their money. Is it cryptocurrency? Is it US equities through the free platforms effectively, or do you spend some money and put it in Australian platforms? So, you know, fascinating sort of case study. I know Lindsay Bryan's actually from Macquarie Uni's just said this sounds like a great case study. You've probably seen pop up. Chris, let's move on to I guess a bit more of the B2B sort of world. Back to the B2B world with your business.
Yeah, it's similar to Fiona. I was in corporate for quite a long time. As you know, Peter, I've been in banking for, you know, over 30 years, which shows my age, obviously. And in that time, I've sort of had a breadth of experience. Worked in the UK for 15 years, worked in Africa and other jurisdictions, and across investment banking, commercial banking, and transaction banking markets. And through that period, I sort of moved into the project land, the technology side. I didn't start out doing that. I started out in an economics capacity, and then fell into project land through some big transformations at some of these larger banking institutions. And through that process of running these projects, obviously I was a novice at the start. Over a period of sort of 15 years, I was doing the same sort of initiative time and time again, with the same type of outcome, and a lot of challenge. And it was at that point that I identified data as probably the main issue. Obviously, there's a lot of RegTech people on the call. Organisations started to change the way that they wanted to provide services. They were, you know, acquiring smaller bespoke solutions, moving to the cloud, all of those things. And what tended to transpire is challenge projects resulting from, you know, a lot of cost pressures of change, particularly regulatory pressure. And those things combined to make a quite challenging transformation process for virtually every organisation that I've been involved in. So we decided to focus very much on the data, and we brought in industry experts to help us form a go-to-market plan, very similar to what you've described, Al. And we sort of went through the process of saying, look, if we can build technology teams working with industry experts, we'll be in a good place. So I kicked the tires, similar to Fiona, in the market, and got a lot of positive feedback. And then once you start doing it in real life, it's a very similar challenge to, I suppose, many people on the call and Al's experience. So the upside of financial services, particularly for this cohort, is it is extraordinarily regulated, and it's extraordinarily risk adverse. The challenge then is the barriers to entry can be really high, no matter what it is that you're doing. So when we first started, we relied very much on relationship to identify challenges. Primarily at the start was, data warehouse transitions, and then increasingly on the registry space, the APRA reforms and the changes that APRA were rolling out, AML challenges that a lot of the organisations face. So we'd go in, we'd clean the data up, we'll help them integrate, and then that was working, quite well. And then what we found was, as the industry became even more heavily regulated, particularly with third-party suppliers and other legislation that rolled through, that the deal cycles took longer. They went from being sort of a 3-month to a 6 to a 12, particularly when you're not familiar with the individuals and you've got to build those relationships. It's really quite a long process. If I was to sort of look at the main challenges we had initially, there were sort of two things. One was the acquisition of clients, and obviously the working capital that's required to support the work once you win it. And then secondly, we went through that period, the Ajika's 7 years old. So just before COVID and during COVID, where talent, particularly on the technology side, was really scarce. So we had an issue of fulfillment. So we went from an issue of acquisition to fulfillment. We tried partnering. We tried a whole number of different things that I think we've already touched on already. And then what it came down to was a process of just getting a little bit better each day. So we weren't trying to, I think Fiona touched on all of the pre-work that she did on the strategy and all of the PowerPoint slides. We worked out quite quickly that it was the incremental effort to, get our ISO certification, to get on the right panels. And I don't think it would be any different on the technology side. Obviously we work with a lot of fintechs that go through the same process. And it really is being organised, I think, in and clear on your value proposition to reduce that barrier. So for us,
do you want to maybe, Chris, do you want to give us a bit of an insights in, just sorry to jump in, just maybe the numbers of staff from when you started and what that journey is, because obviously yours is a bit of a labour intensive business, and very much about specialist expertise, which you've touched on, the skills gap. Do you want to maybe just give us a bit of a sense of the numbers, where you started, where you got to, and what you are today?
It's a good question. It actually has gone up and down. So when we started, we were very labour intensive, and relied heavily on FTE, and there was a lot of risk associated with that for any consulting focused business. And then we sort of got up to sort of that 30, 40, and now we're sort of dropping back and have more contingent support. But we've also transitioned to more annuity-based income by using technology ourselves. So where in the past we'd have larger teams, a big point of difference for us now is that we leverage, first of all, an established method that's digitised, and then we use a lot of technology to do work that was previously heavily labour intensive. The reason for that is an adaptability issue. With a lot of the larger financial services companies moving to either big hyperscalers in India or offshoring themselves, for us to be able to reduce those barriers that I talked about previously, and to have a point of difference, we drive a very much a specialised technical lens that allows the organisations to not onboard lots of different people. And once we've had that method and we started to digitise and productise that, we're sort of like the complete opposite of where Fiona went. That in itself is outside of annuity income that's trickling in, albeit slowly. It's a massive point of difference for us.
It's a bit of, I think, maybe I don't want to put words in your mouth, but it's almost a bit like you've obviously had to evolve over the 7 years as an organisation, and it sounds like the client base in the sector is rapidly changing, which again, I guess is why the RegTech Association exists. Is there is innovation and change, which everyone in that broader ecosystem needs to adapt to, including the support partners and consultants and outsource parties. That's fascinating. So keep going, Chris.
Yeah, I was just going to say that I think that the main change is because of the risks that are inherent with transformation, a lot of the organisations are chunking it down. And so where that becomes advantageous for new entrants is that you can identify point solutions, and regulatory space is the obvious one that is very prominent. I think it's actually more prominent for being able to avail of that opportunity than fintech itself, because in my experience, the RegTech side of it, and we focus so much of our energy on the regulatory side because it's the space that they have to spend, no matter what.
Yeah, no, it's fantastic. I just wonder, before we go on, I want to ask what you do differently in hindsight, and I think a couple have already touched on. Before we go there, I just noticed Alexander Hassel's just put a note, Alex is the CEO and founder of Your Financial Wellness, about the due diligence and procurement process, which I know the RegTech Association has spent a lot of time trying to help organisations get that down. Alex has said it's been key to quickly gauge whether the organisation is genuinely motivated to close the deal. Otherwise, it can drag on with little process. I think all three of you, by the sounds of it, have had some experience. Is there any advice you could give around that, sort of trying to identify whether you're going to get there or not, and deal with the bureaucracies and the procurement process? Fiona, any tips you can provide?
Yeah, well, I have a pretty slick sales process now in terms of dealing, and we've just brought on a global bank, so we're excited about that. But the process is the same for them as anyone else, and I feel strongly about that. But it doesn't mean that they aren't going to make the process longer and bigger and lots more people involved. And I guess that's the thing. So let's say you come to us, we do a demo. One of us will do a demo to you. We do the pitch. We send you the pack. We send you the information. Would you like a follow-up? We do the follow-up. Then we'll send you the contract. And we'll say, this is a software license if you'd like to have a look at it. It's pretty clearly on, and some companies just fall away, and that's okay. I mean, this global bank contacted me a year ago, and then they just rang me out of blue last month and said, actually, we'd like to sign up tomorrow. And I was like, great. I mean, it can take a long time. Sometimes things go cold. But once the balls start rolling within a large company, and I guess I've had the advantage of actually being the procurement person inside. I was working for the banks for 17 years. So, and I, used to be part of procurement teams that would do $30 million deals and things like that. So here I am now on the very other end, doing $20,000, $50,000 small little deals, and I'm the vendor and I'm being put through the ringer. So yeah, they do get their lawyers on. They want your ISO 27000 certificate. So it is really good to have had experience in that. I can review a bank contract, and I don't necessarily get my lawyers involved in certain areas, but really just you just need to move along with their process and understand their process. I think that's probably my biggest advice here, is ask that person on the other end. Okay, are you going to have to give this to your lawyers? Yes. Where are your lawyers based? Oh, they're in Melbourne and you're in Sydney. Oh, okay. So I've had processes where I'm dealing with someone and they pass me completely to another team, and we don't even talk again until 25 emails later between the lawyers and my team. We nut out all the contract, all the little clauses, and you also should be really keenly aware of what you're willing to accept or not accept in a contract. And I think that's sometimes for younger founders in particular who haven't had a lot of experience in corporate, that can be hard to navigate. With experience, it just becomes really easy to know when you can say okay to something and where you're going to hold your ground, and do hold your ground, because legally there'll be a good reason for that. So proof of
Have your
concept is
ducks
another
lined up
way
a little
companies
bit?
do it.
Yeah. Have your ducks lined up a little bit by the sounds of it, and eyes wide open. Al, I know you've had a few partnership discussions over the years, some come and go, and
yeah, correct, Pete. Yeah, well, that's exactly right. I think to more what Fiona said, I think patience is a key. Coda Capital, which is a great Australian investment wealth manager, they manage 12 billion of assets. 4 of that is non-for-profits. That's 2 years of conversation. We've did our first trade December, and we've done a lot more this month. So it's been a long time coming, a bit like the investment banks. But now I'm in there with a couple of partners. They've got 30 odd, 40 partners, so that should hopefully open up a bigger opportunity for us. Yes, but you're right. I mean, we had one classic where it was a new technology play, an advisor platform. We spent a whole lot of time, a whole lot of energy, a bit of money, 12 months worth of work, and they just disappeared. So, I mean, you especially as a new startup, you've got to keep chasing those things, because, if that had eventuated, then that would have been, off to the races for us. But, you've got to pursue it, but you also, at some stage, sometimes it's better to cut your losses.
Chris, your experience with the procurement process? I think you kicked us off with this discussion.
I think it's a combination of what both Fiona and Elle said, is obviously having that extreme discipline around engagement and making sure that everything is compliant. And there's an adage that time kills all deals. I can testify to that. And outside of that, patience, when that, the longer it goes, the more issues obviously are there in terms of buying motivation. The one thing that I try and do is to ensure that there's the person that is engaged in the first instance to do the work or buy the kit, support you internally. That is pretty critical in the work that we do. Having that senior stakeholder to say, because at times, I think Alice just touched on it, you can be dragging your heels with procurement contracts and amendments and so forth, and at some point you need someone upstairs to support expediting that process. Otherwise, it becomes problematic.
Yeah, no, absolutely. Getting an executive sponsor is clearly important. That's fantastic. Thanks for that. We might just go back to what you do differently in hindsight. And Fiona, I'll go to you. I think the two I probably picked up conversation-wise was founder versus co-founder. Interested to know whether you do something differently in hindsight there. And then, going into an accelerator after you'd started, just interested if they are hindsight sort of observations, and anything else you do differently.
Well, the first thing comes to mind, I'll talk about founders in a minute. The first thing that comes to mind is, for me in particular, is the ability to pare back my skills. And so what I mean by that is, yes, I can build a 5-year financial forecast. I have an MBA. Yes, I can build a 7-year marketing strategy or a 50, 100-page marketing deck with every single channel and everything. But in your first year, you don't need that. You need to build and you need to sell. You need to prove yourself in the market, and you need to find someone who's willing to give you money for the thing that you've made. And it's really as simple as that. It is great if you've got all these other skills, and I think that's a good thing for me. I think in hindsight, I probably wouldn't have spent as much time on it, but I've always felt very comfortable that I've got all of that ready, and that's certainly served me. So it doesn't matter how good your governance is early on if you've got no sales. I wouldn't recommend being a solo founder. It does require double the effort in a way. And later on, also found out that being a solo founder, let alone a woman and a single mum, can be seen as risky by investors, right? Because they're investing in one person. They do like to see a team of people show up. And in some places around the world, they like to see a young team show up. So, but anyway, these are things I found out in the accelerator. I'd already built by then and got customers. So, I'm glad I wasn't told those things early on. But I wouldn't discourage you from doing it either. If you're driven and capable, you can do anything. I'm proof of that. So don't ever let people tell you that things are too hard. I've had the CEO of one of my competitors call me early on, once I entered the accelerator, actually, because that's when the market started getting visibility of what I was doing. He was in New York, and he spent an hour on the phone to me telling me how difficult my journey ahead's going to be, which was interesting. I thought once I joined the accelerator, I'd been in corporate for a long time. I was with all these founders who, literally the first meeting we had together, we went around the room and everyone started with the same thing. They were proud. They said, "Oh, I'm highly unemployable because all I do is build things and make things happen." And I was like, it got to me, I was like, I'm highly employable. and in a way, sometimes when things get tough, I think, oh, why don't I have a proper job? But I do now, I do. And so I thought, given this experience in Accelerator, what I saw that, and you asked about what would I do in hindsight, I thought at the time that I should have gotten external funding up front, especially when I watched a new founder friend of mine raise over 250,000 US in 6 weeks without having built a thing. He just had some fancy slides. Him and his mate had come back from Bali. This great idea. They put a few slide decks together and off they went. Kept coming back. Oh, we just got another 50K US commitment. So they'd raised $500,000 Aussie in 6 weeks, and I'd built a product, taken it to the market, and I wasn't earning nearly as much as that. But look, I've raised capital through a family and friends round, and I can say that once you invite other people's money into your business, you do have obligations to them which have to be met. So there's an additional personal responsibility. And there are founders out there who are, ideas people, and they do get bunches of money. I've met founders who've been given 9 million and blown the whole thing. Now, that's not a really Australian thing. You won't see that here, but in the US, there are big investors who will just get their fund out amongst as many founders as they like. And then, if 10% pay off or whatever it is, that's a good number for them. But look, as a woman, we get less than 3% of global funding. So it was probably wise just to forge ahead with my blinkers on to the world of startup funding at the time. But that's not to say that now we are always open for business when it comes to partnership and investment.
I think sorry, you go. Keep going.
On a co-founder, I think the main benefit to having a co-founder or an investor early on is really to alleviate some of the intense work that you have to do up front. I worked very, very, very hard, and I would have loved to have shared that, and still would like to share it. It's just a bit difficult now that we've got bunch of revenue and we've got we've got investors and things. How do I have toyed with the idea of trying to find a co-founder. I've had people recommended to me. What percentage would you give them? How would they invest in it? How would that work? There's a whole lot of things around that, but without the additional resources up front, you end up going slower than competitors. That's the other thing.
I think, as you touched on in the accelerator, of course, if you've got founders that are very technical and good at building stuff, but may not be any good at selling, for example, or managing relationships, then I think that's also a good, compelling reason for a co-founder is the complementary skills. Al, just your thoughts on what would you do differently and any lessons?
Yeah, lots. As you know, Pete, we're a co-founder, so it's Ben and myself, which I think, I totally get what you're saying, Fiona, and I think it'd be hard to be a single founder as opposed to a co. We worked really well. We bounced ideas off each other, and having that other person who's going on that journey with you was, for me, it was, fantastic. Albeit during COVID, so that was a little bit hard because I was in Camberwell and he was in his apartment in the city. So we were, 8 hours a day, 10 hours a day on Skype, and Zoom meetings, but we sort of got there. And I certainly do, understand also, we took capital early and Pete was an early investor. And that was through not so much friends and family, but close associates, business people that I've dealt with over the years. And that adds totally more pressure on you. If things aren't going well and you're burning through that cash, you as a founder and me personally took that extremely hard. So that's an added, it is an added burden. If you don't need to do it, then maybe you are better not to do it. Having said that, what would we do different? Certainly wouldn't blow $500,000 on a TV commercial. That was, you know, I mean, we've got a great TV commercial. If anyone wants to watch it, you can go to our website. But, you know, hindsight, that would have been better, probably spread that, you know, that investment out over social media advertising. You know, we probably would have got a longer runway, probably would have got, you know, 12, 18 months out of that. You know, you could have actually stretched it out to probably a lot more. And I guess for us, you know, I think it was, well, for me, was putting all our eggs in one basket, you know, thinking that the whole retail play was going to be the play, which clearly didn't pan out that way. So, you know, for me, what we learned was, you know, you need to be nimble, you need to be, you know, agile and pivot the business when you need to. You know, if it's not working, you know, don't hold on to that ego and go, no, it's going to work because I think this is a great idea. You know, if it's not going to work, you need to look at other ways and go, okay, well, how can we pivot this, what we've done, and try and build a revenue line in a business out of it.
Yeah. We might come back again with everyone just on how you're going today, actually, and you keep going out. Chris, just briefly, I'm just conscious we are running short of time now. Just again, what would you do differently? Is there anything in hindsight?
Well, it's similar to Fiona. I started the company myself and with my own money. With capital, I think it would have brought obviously that additional pressure. Probably would have put greater rigor around the governance and allowed to grow faster. So if I had my time again, I probably would have selected the right investment partnership to support that. And I think the biggest learning, you know, coming from a career in corporate and then doing something like this is the ability to make decisions quickly, have hard conversations, was something that wasn't really natural to me at the start. And then you realize quickly after things that aren't going to plan, the longer that you leave them, you know, the more problematic they become. So if I was to advise any of the people on the call that are looking to do something on their own, there's a real learning curve in terms of being able to make quick decisions, and then making those decisions, and not stewing on them, whether they're a commercial or otherwise, because you only make decisions with the information you got at the time. And I think ironically enough, making a bad decision sometimes is better than no decision. They're the things that I would definitely do with more rigor next time around.
I think they call that founder mode today. I'm not sure Elon Musk is anyone's role model for these things, of course. But that's another story. It's fantastic. I think let's just finish off in the last few minutes. Maybe just give us a bit of an update on where each of your businesses are going now. Feel free, as any founder does, to do a shameless plug for your business as well. Fiona, where are you up to right this minute? What's ahead the next 12 months?
All right. Well, we're watching our competitors. We have quite a lot of competitors now, as something which maybe I should have looked at more closely up front, but you know, being a builder. So our competitors are companies like Banter, UpGuard, SixClicks, and others who have tens or hundreds of millions of dollars in funding. So we're 3 years in, we're bringing on new clients, we're winning business of companies who are using those products, which is fantastic, with a smidgen of the funding that they've got. And we watch our competitors' fancy marketing teams and complex solutions and really big stands at expos and stuff like that. But we just stick to our guns when it comes to making it easy. And this is making it easy for security and risk teams to assess the maturity of their security controls in a way which enables them to manage the risk, but also meet all their obligations across many security standards and frameworks. And so really sticking to that vision is really important. I think back to Chris and Al's point about being able to chop and change. Yes, we are very agile. It's one of the benefits of working with a smaller company is that we're super agile. Our clients say they want something. We'll go, yeah, okay, we can make that happen. Our next release is next week. Yeah, we can just do that. We'll make that happen. But it's really important to stick to your vision. And our vision is to make it easy for everyone. So we're also working with a lot of MSPs and consultants to help them work with other businesses too. So we're bringing the skills to the table. So we've found channels that we can distribute our software through, and also sticking to our vision by making security assurance easy for everyone. Yeah, we're always looking for a chance to prove how much easier our solution can make your work. So if you're a security and risk manager, please get in touch, because if it sounds like something that might interest you. Or due diligence,
Yes.
We're very good at helping you with your due diligence processes on the security side.
Thanks, Fiona, and best wishes for your
Thank you.
your business at Assuredly. Al, what's we got our strategy day on Tuesday, so
We do.
you can tell me a little bit of what's ahead for the year with Trade for Good.
Oh no, there's some surprises, Pete. I'll keep that for Tuesday. No, look, I do believe this is our year. I think, you know, for us being in stockbroking / financial markets, it's time in the market. You know, we're 4 years heading into our fifth. You know, having some of the bigger brands, like as I touched on before, Coda Capital, putting the faith in us that what we're doing is good, is a really good sign to the market. You know, we do a lot of social media / LinkedIn posting around, you know, partnerships and what our partners are doing, and I think that's really starting to resonate. So I think that that's certainly going to continue to grow. The retail business is there. We absolutely, anyone who trades for ComSec, please come across. You know, Matt Common gets his $10 million a year salary. We give it to charity. So, you know, that will continue to go. We've got a really good SEO team, so we just organically grow that business. And I think, you know, as you know, Pete, we're sort of, you know, broadening our pitch again from the institutional space. You know, we're looking at the member bank space. I think there's a big opportunity for us in that space, because if you think about when you trade shares, you've got to open up a bank account. So if you're part of one of these member banks, you're going to have to open a bank account with CommBank, NAB, Macquarie. They're the three sort of favourites in the space. So you're moving money away from those member banks out to the competition. So I think that the conversations we've had so far, there is certainly some high interest in that space. So I think that that could be a watch that space for us this year.
No, it's fantastic. I'd echo Al's point. If you are trading shares, or if you've got a SMSF or any sort of portfolio, it's great service that Trade for Good provides, and you can actually pick up a phone and talk to someone. You don't have to push endless buttons and do laps of the planet to the outsourced providers. So I've got my endorsement. Chris, you can bring us home just with a bit of an update on Ajika, and then we will unfortunately have to close off after that.
No, that's fine. I'll try and keep it to a minute or so. Look, our focus is really around that transitioning to product and to supporting our clients become self-sufficient. And the strategy that we have identified really is to support mid-tier, your tier 2, tier 3 banks across the world that all face a similar problem. So we've basically moved all of our IP into technologies that people can avail from anywhere. You know, from Jira to Confluence through to the cloud native capabilities across the three, so they can then integrate with technologies such as those on show in the RegTech world. Without having to bring in armies of people, we can help them become self-sufficient. So that's sort of our vision, Fiona, around supporting those. We've spoken to banks in Indonesia and other places. So that's the exciting bit for me.
Thanks, Chris. Best wishes for you as well. We've run out of time. There was one question from Jawad Latif. I think what we might do is one of us might go back to him in the Teams chat, because it's still open afterwards. Sorry, Fiona, you're on mute there.
Oh, I'm just writing Jawad a response now.
Excellent. Thank you. We'll deal with that. Stay on the screen. I might get Nathan just to pop the slides back up. We've got 1 or 2 slides to go, including my... Here we go. We're almost there. We've got Nathan, but can't see a picture. Here we go. Yeah, so it's just, look, thank you for the panelists. It's been fantastic. Again, I love hearing not just the war stories, but, you know, the passion that founders have got. And I myself, I've dealt with dozens, probably over 100 now in the last 5 years, and it's just fascinating to hear their story. The book, which is up here, was released before Christmas. It's on all the major platforms, 13 countries with Amazon, Apple, Kobo, Gumroad. But if you go to Guru World, use the code, you can get 10% off. It is a bit of a how-to guide, Startups 101. So if you start it up, I'm not too sure you're probably going to get a lot out of it, but it's ideal for anyone, if you've got younger staff, nieces, nephews, university kids that want to learn a bit of the language of it. Go to the Gorry World website, sign up for the newsletter, and feel free to reach out to me if you've got any questions. Thank you again for the RegTech Association putting this on as well. And I will hand back to Deborah for a very quick goodbye, I think.
Thanks, Peter. If I could trouble you all before you go anywhere, please complete this little poll that you can probably see on your screen right now. Can I just say I picked up an enormous amount out of that session. And Fiona, I think that, financial runway / emotional runway is a very good, it's a very good idea to apply in actually all areas of your life. Do I actually have enough money for this? And do I have, can I dig deep enough emotionally with everything that I've got going on to do it? I loved it. Being nimble and agile and also making quick decisions is super important. And one of the contributors during the sessions I know was Lindsay from Macquarie University, and he will not be kidding. If any of the startups actually on the line would like to do an MBA project, I know that he's got students lining up looking to get their teeth into some real world problems. So if any one of your businesses has something you'd like a group of MBA students to work on for you, I know that he was not kidding when he came up on the thread. So thank you very much, and thank you to you, Peter. That was excellent, and do download the book. We will actually send a wrap up of everything that you heard today, including the recording, out tomorrow with our customary thank you note. And if you haven't already, please do think about registering for some of those events that I showed on the screen earlier, in particular the conference. And also, if you're a startup out there, you're a RegTech startup, we want to see your application in for the RegTech Awards, because this is what it's all about, getting yourself out there, getting your brand out there, and getting the potential buyers to know you more deeply. And it's a great way that you can do that. So without further ado, I think that's all from me. Good evening, good morning, wherever you happen to be, and we'll sign off now. Thank you very much.